Hey, welcome everybody to the Money Business Podcast. My name is Brian Weyman,
I'm Neal, Regino.
and we are here to talk about things involving money. So, what are we going to talk about today? Other than the fact that I wore this purposely wore this ugly shirt to video this because I thought it would look weird on camera,
That's a good idea.
distract from myself.
Yeah, yeah.
But had a meeting last night with somebody, and the first, client review. First thing they want to know is how they're getting their $6,000 thanks to what they've seen on the news about the big beautiful bill. So I guess that'd be a great subject to talk about today. Would be the big beautiful bill. So you getting any feedback from your clients on their feelings on this?
Well, yeah, it's a lot of exciting stuff, personal level that I'm dealing with, stuff with clients. I think we've gotten a lot of interest on what the changes are, what they mean, how it impacts people. So I think it's really important that we just go over some of the broad strokes. Obviously, there was 900 plus pages. In fact, I downloaded it. It was like over 1,000 pages in the bill. Have you ever read through one of these bills?
The whole nine? No, I've never read anything that's 1,000 pages. I don't think.
It's interesting. It's not the first time, but this one was it's pretty choppy the way that they write, and it's there's a lot of references that you have to go look up inside of the bill. But at any rate, the main points that I was focused on were the ones that affect our clients. So we were trying to get ahead of this before. There was a lot of professionals dragging their feet to get information out. Now a lot of places do, so I think it's worth us talking just some of the key points. So yeah, to your point, let's start there. So, well, actually, let's start with the tax Tax Cuts and Jobs Act. So they expanded the 2017 cuts are now made permanent. So that's a big one that there was a huge. It would have been. The Republicans like to say would have been the biggest tax increase in our country's history, and now became the biggest tax cut in our country's history by extending those. So nothing's changed from 2017. So that's a good place to start there. The standard deduction increased a little bit, not a huge amount. So that's pretty key to most people will be saving some money there. For us, I think this one's important. Is the SALT cap increasing to 40,000, even though it's temporary, and that obviously was a big contentious part of getting this thing passed. And then the student loan provisions, that's not going to affect a lot of people. And then increasing the limits to ABLE accounts. Those were the big things for the TCJA that were either made permanent or changed. So. I don't know if you have anything to add on those before we get into what you actually just brought up, but
No, but there's some of the bigger things there, right? From what I've read through, there's the big beautiful bill is big, and like you said, it's 1,000 pages, and there's some really significant things inside of it, and there's also some real tiny little changes that are, some people might find insignificant, but it depends on who you're asking, right?
Mm-hmm.
Like we were just talking earlier about the 529 plan changes. It expanded on what you can spend your college savings on and count it against, and I mean, it's really not that big of a difference of what was already there,
mm-hmm.
but to somebody, those little changes might be important.
Yeah. And there were obviously some changes with 529s that came last year with Secure 2.0,
Yeah.
so that's just expanded slightly on that. So what you mentioned was the senior citizen deduction. So
Correct.
For an individual who makes less than $75,000 a year with Social Security income and any other income, and whether they're making that or not, if they're
File
actually
single,
Yep.
by the way.
So even if they're working and not
Right.
taking Social Security, there is a $6,000 deduction
Yep.
that is now in place. It is not a credit, so I want to be clear when Social Security is still taxed the same way.
Yeah.
It's just that if you're at 75,000 or less, you get an additional $6,000 deduction, and it phases out over a certain income level up to $150,000. So there is some credit that you would get, but or some deduction that you would get, but it's not a full credit on 6,000. So I think that's some parts that there was needed some clarity with some of my clients where they were like, "Wait, am I getting $6,000 off of my taxes?" It's like, no, you're getting a deduction of 6,000, and then for a married couple filing jointly, then it's $12,000 and 150,000 in income. So
And this all goes to 2020 from now till 2028.
correct, yeah. So it's temporary.
So
The other temporary ones that we hear a lot of is no taxes on tips and overtime. That's another temporary one. So for tips, it is up to $25,000. That is a reduction, a deduction, and then also the same amount for overtime pay as well. So that's going to be wiping out a lot of taxes for a lot of people and incentivizing them to work more. I think
Yeah.
that's the main thing is especially as this administration is really trying to bolster manufacturing. They want where you are going to have workers that are getting paid a lot of overtime jobs that are hourly that they want them to be able to benefit from that. So
yeah, you know, in the good old days before everybody put everything on a credit card and debit card, people who got tips didn't claim them anyway. So
yeah, yeah.
go back to the 80s and early 90s or 70s, and
I grew up in a restaurant. I mean,
yeah,
I
so
didn't.
they didn't claim them anyway.
Yeah.
Now everything's on a card, so they really can't sit on their tips.
Yeah,
Not that I'm saying that's okay.
yeah.
Just saying.
And again, those are temporary. The other temporary one is auto interest. So if you purchase a car that final assembly was in the United States, then you actually receive a deduction on the interest if you finance it. It has to be a new car, and final assembly has to be in the United States, and you can deduct up to $10,000 a year.
That's an interesting.
Yeah, so it's not American car
Right,
companies.
has to be finished here.
Yeah, so that's actually something for me to think about. I have finally have to buy a family car, and
And your car's old anyway.
well, I'm keeping my baby, but the an SUV I have to buy, and I've been deciding whether or not to buy new, whether to finance it, whether I should buy American made, or whether I should buy I like my Japanese cars, my Hondas and my Toyotas,
Tell
but
them just not to put the tires on until it gets there.
well, they are primarily manufactured here anyway, final assembly, so I'll still have my options open on and. That's actually for me. This incentivizes me more whether or not I should finance versus just paying for it. But
Yeah. So the interest is the deduction, not the payment.
Correct.
Just the interest.
correct. The other one that's interesting are these Trump accounts. So if you're born between 2025 and 2028, you can put into these accounts up to $5,000 a year, but the government's going to fund $1,000 into it. And then you can't touch the money until the child's 18 years old. Really, they're designed to have, from what I understand, similar rules of an IRA. That even if they touch it after 18, you really still have penalties and taxes on it. But so at least the government's offering something there for that child.
Right.
to-
And
to
this
get
is
them
something I'm
started.
assuming could be gifted from a grandparent or something like that too, or newborn.
I actually am not sure if
Not sure yet.
if it's going to be like a 529. So don't take my
Yeah.
anything I say on that.
Might be something
but
to consider looking into though.
yeah, I'll look into it.
For any, well, you don't have to, you're not a grandparent, but for any of the grandparents out there, maybe look into that if you have a new grandbaby coming 2025 to 2028.
So that's really the changes for individuals that are bigger that we're coming across more often, that we're going to experience a lot more often. As far as businesses, there's some significant changes. One big one that impacts us, right, is the 199A deduction, the qualified business deduction. That has now been made permanent. So that's a big one. I mean, that helps a lot of companies when it comes to taxes, keeps more money that they can put into the business, into their workers. Any input on that one?
Not really. I mean, it's basically very cut and dry.
Yeah. There's one that may or may not apply to people right now, but this small business stock gain exclusion. So the Internal Revenue Code currently allows a tax exclusion on gains from the sale of qualified small business stock. Now it reduces the holding period requirement for stock acquired after enactment from 5 years to 3 years. So it expands the asset value to qualify under this, and increases the limit on the value of the gain that can be excluded. So shortens that time frame if people are looking to sell out, and how they're going to actually handle those taxes. So all of this, by the way, you definitely want to make sure you're working with professionals.
Sure.
It's not going to be, we would bring in tax professionals and legal professionals if you were in the middle of selling something that you wanted to figure out how it's going to be impacted. But
And I know we've read through this and we've actually found some resources where it kind of broke the bill down because nobody's going to want to read 1,000 pages
Yep.
of this thing. And of course, in the 1,000 pages, there's a lot of, filler, I want to call it, legal mumbo jumbo, for lack of a better term.
yeah.
Maybe do we have any resources for people to look at?
Yeah, we actually created our own piece as well that's approved. And I will say, if anybody wants to contact us, and we can send them a PDF with this information broken down a little bit more simply. It's 4 pages long.
Yeah, 4
then-
pages, not 1,000.
Then, yeah, they
Of
could,
specific things that people should be concerned about.
yeah, they could definitely contact us, and we can send it out, and we'll talk about how to get in touch with us. So the other one, the bonus depreciation. So this one's pretty big. So 100% bonus depreciation for certain short-lived assets is now permanent. So that's a big change as well. And then efficient energy deductions. So many deductions related to clean energy and fuels are now terminated. That's good or bad depending on what industry you're in. The other thing that I'll say is, even if you're working with the right accountant, if they're not actually looking into some of these more advanced tax credits that are out there, there are companies that specifically will help with these, the R&D credits, depreciation credits, things like that. Then it's worth talking to them. I know that the few that I work with, there's been some significant opportunities with this new bill. That it's definitely worth asking your accountant about, and if they don't know, to find these specialty tax companies that CPAs usually work through in order to see if your company qualifies for more deductions. The other one that's the last one that's in there doesn't apply to a lot of Americans, but this one does apply to a lot of business owners. So the estate and gift tax law permanently setting the exemption at $15 million adjusted for inflation. So the estate and gift tax exemption is a cumulative lifetime amount an individual can transfer during life or death before estate or gift tax applies. So it's a big change.
Yeah.
So,
For those people that have
yeah.
kind of money to reach that 15 million threshold.
Correct. And if you're a business owner and you're looking to get to that threshold, or you're already there, then you definitely want to talk to a team of professionals. And then I'll say, if you do want this information piece that we put together, you can go to our website, evolutionfg.com, and you can either contact Brian or I. Our information is on there. So
Yeah. I'm curious to see how the clean energy piece of this plays out, especially with all the solar, and it's going to have a major effect on these solar companies. And how does it just going to affect the homeowner? Do we even know that?
yeah. So first of all, there are state-by-state credits, right?
Right.
A lot of that is federally funded, but I will say, from working with a few companies that I have as clients that are in that space, they've already been prepping for this to
Yeah, I'm
start
sure.
to pivot in case this did happen. So there are definitely, anytime there's a shakeup, there's going to be winners and losers, but it's about who can adjust as a business owner with changing times. Obviously, we saw a lot of that during COVID, and how you had to shift depending on what the market's doing and what the environment's doing. This one's a big one, especially people that were expecting money to come in that was government funded. So, yeah, I mean, obviously, this administration really wants to push the natural gas and fossil fuels and unleash that energy, and try to drive down prices. Otherwise, I think at some point there will be a balance between these two, in my opinion, between clean energy and fossil fuels. But we're obviously shifting the pendulum the other way right
Yep.
now. So, but yeah, there's a lot of people scrambling right now,
Yeah.
for sure.
Yep.
But anyway,
Well, as
Anything
Neil
else?
mentioned, if you guys want this, if anybody wants this information, just go to our website, evolutionfg.com. You can reach out to one of us. We can get you to bullet points and talk you through whatever questions you have. Right?
Perfect. Thanks for your
Good
time.
enough. Thank you. Have a great day.